Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video today, and as usual, don't forget to please like this video, subscribe to my channel. That will be really appreciated. So in today's video, I'm going to be talking about what happened in the markets last week, and I will also be explaining a little bit about how our portfolio performed last week. So I will get things kicked off. So last week, our portfolio performed actually quite well, and that was against the backdrops of the wider market going down last week. So the Nasdaq was down about 5.6%, and the S&P 500 was down about 3.3%. And if you look at our portfolio was up about 1.52% for the week. And that was mainly because we have European stocks within our portfolio that did quite well. Specifically, China bounced back very well last week, mainly because there is a lot of talk at the moment that China could start to be more lenient on the COVID-19 policy in the future. It was also quite a strong performance last week from crypto, as many altcoins bounced quite considerably last week. It's a bit different today as I record this video on a Tuesday morning. There has been a massive dump on the back of the Sam Bankman-Fried, FTX and 𝗳cie war, which I'll be explaining a little bit about at the end of the video. However, it was quite a strong performance last week from crypto, although it has changed today. I also did lots of short-term position trades in the France 40 index, KION Group, the US dollar 𝗁cie, which is Swedish krona a pair, Ocado, as well as many natural gas trades. It was quite volatile last week, so there was quite a lot of good trades there in natural gas. And then Guangzhou Automobiles and 𝗁cie AB. So there was a mixture of both long and short positions to take advantage of the volatility and book in some profits. If we look on a 2022 benchmarks level, our portfolio is down about 35.18. And the Nasdaq is down about 33%. Over the last kind of couple of weeks or so, we've inched a lot closer to the Nasdaq in terms of the benchmark, as well as the S&P 500, which is down about minus 20.9% overall for the year. And if we look at Bitcoin, it's down about 55.25%. Our portfolio has quite a lot of crypto in it. So if we kind of compare the Nasdaq, the S&P and Bitcoin, which our portfolio has all of those different types of stocks or assets in them, I think our portfolio is actually faring quite well considering the weight of crypto. And obviously it has a lot larger upside than many of those other indices. So as we move on to the main news from last week, it was a continual tough week for US stocks in particular. There has been many earning reports over the last kind of couple of weeks, and a lot of them have come in quite weak in terms of technology stocks. But last week was really kind of dominated by the US Fed FOMC meeting. And in that meeting, it was actually announced that interest rates were going to rise by 0.75%, which was the consensus estimate. And however, within that meeting, Powell also said that they intend to continue the pace of increases. And that it's not just about the pace of the increases, it's about how long that they actually stay there in order to battle inflation. So it was kind of quite a hawkish tone, which is why we saw a negative movement in stocks last week. We also seen many hiring freezes and job cuts. So last week it was announced that it was going to be a hiring freeze in Amazon after the back of the quite poor earnings report a couple of weeks ago, as well as Twitter, who obviously have had Elon Musk come in and complete the acquisition. And within that acquisition, Twitter were losing a lot of money, and they had a lot of high overheads, and they have cut those. So this is a sign that although the job market is quite buoyant, many of the tech companies are starting to either slow down or started to reduce their workforce. We also saw some job numbers. We saw 261,000 new jobs added to the new non-farms payrolls, and this was above the consensus estimates. However, the unemployment rate did rise slightly from 3.5% in September. So we are seeing signs that some of those interest rates and the monetary and fiscal policy being put in place by the Fed is starting to have an effect on unemployment rate. We also saw inflation in the Eurozone has continued to accelerate, and it's hit 10.7% in October, and that is from the 9.9% in the previous month. So inflation hasn't yet peaked in the Eurozone. As I said, it's very likely that the Eurozone will peak a lot later because of the nature of the dependence on oil and natural gas from Russia. The Bank of England also increased interest rates to by an unprecedented level of 0.75%, which brings it up to 3%. And this is the highest level in the UK since 2008. The Bank of England, the head of the Bank of England also said that he expects inflation may stay above 10% for the next 6 months and above 5% in 2023. So basically what he's saying there is he expects inflation to hang around for a lot longer, despite them increasing those interest rates. Obviously, there's a lag when it has an effect on the economy after you make those interest rate hikes, and they're expected to stay around for longer in the UK. We did see, however, a good bounce back in Chinese stocks last week. And that is mainly because there was kind of a lot of rumors and newspaper publications which were saying that China planned to relax its zero tolerance policy on the coronavirus. This has severely affected markets in China over 2022, and it's been very difficult for Chinese companies to operate because as soon as they have a flare-up of cases, there is a new set of restrictions in place. So this is very good news, especially for stocks that are particularly sensitive to COVID-19, in which we have a few of those in our portfolio, like Wynn Macau and Haidilao, and they rallied on the back of that news. We also seen US audit officials and completed their first on-site inspection round of Chinese companies ahead of a schedule. As some of you remember, at the beginning of the year, there was lots of arguments between the US and China about audits. China weren't very keen at all on Chinese companies being audited by US audit officials. And this is due to them wanting to safeguard the public information, the national information. However, about 6 months ago or so, the China agreed to let US audit officials audit the Chinese companies so they could stay listed on the NASDAQ and the S&P 500. And now those first round of inspections have actually taken place. So that's kind of very positive news, and it puts away some of those fears that these Chinese companies could be delisted. As we now look at the top 3 performing stocks for last week, and the top performing stock, unsurprisingly, is Haidilao. And Haidilao is a Chinese restaurant chain that sells hot pot. and they have been severely affected in 2022 as less people have been able to go out to restaurants. There's been restrictions on COVID-19, has severely slowed their growth. However, on the back of that news that they could be opening up China and being less restrictions on COVID-19, that has risen by 34.13% for the week. The second best performing stock is another Chinese company, which is a COVID sensitive stock, and that is Wynn Macau, and that was up about 24.92% on the back of that news as well. And casinos have been really badly affected in Macau, and there's been a lot of regulations around COVID-19 and Chinese mainland travelers visiting Macau and the casinos, and some kind of segregation and policies in place as well. And the third best performing stock for last week was JD.com, another Chinese company, and that was up about 19.01% for last week. So if we go into our Death by Charts edition, we will see that the chart to the left is the 30-year fixed mortgage rate, and that is from, this chart is from 2002 to 2022. And you can see that that has gone up to about 7.08% mortgage rate, and that is the highest level that it has been since kind of 2002. So we are seeing very high mortgage rates. I think that this again is going to have an effect on house prices overall as less and less people move out because they don't want to pay higher mortgage rates. And I think that as inflation is a lot of it is to do with accommodation and shelter at the moment, I think that if those house prices start to come down, which they have over the last couple of months, then it's going to reduce inflation. So that could be a good sign, although it is a bit of pain in the short term. If we also look, I thought this was a really interesting chart to the right as well, because this shows really the correlation between US monetary supply. As I said, in 2020, 2021, there was an unprecedented amount of new money coming into the system, and we saw rise in assets as well as that US monetary supply increased. And I thought it was quite interesting to see that the US monetary supply and the US home prices are actually hit the same level. So they've actually both increased by an average of 42% over the last 3 years. So we could say how much of that was actually driven by the appreciation of house values and how much of that was because of the amount of money supply, which has caused inflation, and US house prices are really risen in terms of inflation rather than actually accrued value. Another chart I just wanted to show you as well is that as many of you will know, the US actually have a strategic petroleum reserve, and they go into those reserves when they need to. So they have been going into those reserves a lot this year as oil prices have increased, and they've tried to reduce those global oil prices by releasing oil from their strategic petroleum reserves. However, there is a limit to the amount that they can do that because they are going severely through their supplies at the moment. And actually, the US Strategic Petroleum Reserve is at the lowest level that it's actually been since 1984. So as some of that petroleum reserve starts to be used, again, it's quite likely that oil prices could continue to rise if there is not enough demand destruction in the economy. So we will see how that plays out, but it'd be quite interesting to see whether oil, especially over the winter months, really spikes up close to those record highs again. So on to crypto now. And for crypto, instead of doing my normal news and views of crypto, I wanted to talk about a very specific situation that's happening at the moment. And this is what's really happening. There is a war of words and actions by both 𝘁cie, who is the CEO of Binance, and Sam Bankman-Fried, who is the CEO and head of both FTX, and also he is the founder of Alameda Research as well. So how has this transpired and what is exactly happened? So in this presentation, I put the tweets together, but I'm going to try and talk you through the timeline of the story. So earlier on in the week, there was a crypto publication which leaked the balance sheet of Alameda Research, which is one of Sam Bankman-Fried's companies. Within that, it said that vast majority of their reserves were in FTT token, which is the FTX exchange token, as well as Solana and Serum and some other companies that Sam Bankman-Fried is involved in. And then there was, after that, there was on Twitter, there's something called whale alerts, where you can see where large amounts of crypto are transferred from wallet to wallet or from exchange to exchange. So there was a very large transfer of FTT tokens to Binance. And it had a lot of people speculating until 𝘁cie actually came out and said, as part of Binance's exit from FTX equity last year, Binance received roughly $2.1 billion equivalent in cash, BUSD and FTT. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. So 𝘁cie was involved he was a shareholder in FTX when they were established in 2019. And just last year, he sold out his stake, which was again 2.1 billion, and he has decided to sell. So a lot of this is people saying, well, why has 𝘁cie decided to liquidate this position? He usually holds the vast majority of tokens, even when he sells a stake in a company. And it came to light that the reason why he did that is because they want to have post-exit risk management, and they're kind of learning from their experience with Luna. And another reason, I guess, and the main reason, is that there is a war of words between 𝘁cie and Sam Bankman-Fried, because a couple of weeks ago, it came to light that Sam Bankman-Fried has been lobbying with the US government in order to put in and plan different crypto regulations in the US. And he is a massive donor. I think he's one of the largest donors in the US in terms of political contributions. And one of the things that he put in place and which he talked about was some regulation around DeFi. Obviously, DeFi is decentralized finance, so this didn't go down very well in the community. And he was called out by different people such as BitBoy and a few other crypto influencers. And this hasn't gone down very well with 𝘁cie. You know, you have to remember as well that 𝘁cie's Chinese citizens, and there's a lot of animosity and a lot of heat at the moment between China and the US. And he really feels, I think 𝘁cie really feels that Sam Bankman-Fried is working on his own agenda and putting FTX in a position where they feel like they are the regulated exchange and Binance is an unregulated exchange, and he's doing it at the detriment of Binance. And by going against DeFi, he's also going against the crypto industry as a whole, in which he thrives in. So I think this really is a kind of warning shot, I think, to Sam Bankman-Fried. And another thing that happened as well, Caroline, who's basically the CEO of Alameda Research, which is owned by Sam Bankman-Fried, said to Binance, well, if you're planning to sell those off slowly, those tokens, we're happy to buy those off you for $22. And at the time of that tweet, they were at $22, right? So everyone think, well, why that very specific amount? And it came to light that a lot of the issues with that is that they think that there could be a lot of liquidations for FTX, and that the fact that they could be having kind of a flywheel model where they're using the assets in their reserve, in their balance sheet, in order to do some of these acquisitions that we've seen of distressed companies recently, such as kind of BlockFi was one of those, and Voyager. And you've got to remember that a lot of those tokens that are on the balance sheet of Alameda Capital, they have such a large quantity of FTT, Solana, and Serum, that they can't very easily, or they can't liquidate those positions in the sort of bulk that they want to, really, because there's not enough liquidity, and it would seriously affect the price. So I think what Caroline was trying to do there was trying to make sure that those tokens didn't go on the open market. However, it has gone below $22 for FTT token today, and it has dropped quite significantly, I think over 20%. And it's quite likely that we will continue to see that happen. There's also been some rumors around that that FTX are starting to put limits in place because of people withdrawing money from the FTX exchange. And this is beginning to heat up as more and more people have fears around holding cash on the FTX exchange, because they worry that they won't be able to withdraw them later, and they're going to have liquidity issues. So we have to see how this war of words continues. It's something that we are watching. I have been using this opportunity to buy more crypto on the sales. It has affected all tokens, but I have bought more Solana, as well as buying some other tokens as well in our portfolio, such as 𝗁_bar. We also bought Hashgraph, that is, as well as some other orders that I have in place as well. And I think that this is a great opportunity whilst there is blood in the streets. I don't think it's very likely that FTX will go under. They might have a short-term liquidity crunch, but I think the likelihood of FTX going under is very small. And I think that it's not in the best interest of FTX going down at all. So we'll watch as that transpires. But thank you very much for listening to my video today, and I'll be back with a new video next week. Until then, have a great week ahead.